Good day traders, this is Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the markets for the week of the 14th until the 18th of February. As always, before we get started, please know that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment or trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategy. Now, any information that relates to past performance is not indicative of future results. Now, for all of you tuning in for the very first time, as we've been mentioning for the past couple of webinars, with regards to stocks, we have the Q4 of last year earnings season still in full swing. Now, the earnings season, it's essentially, for those who don't know, it's essentially the period where major corporations come in and announce the results of the most recent financial reports. As we mentioned in last week's Outlook, for this week we had Walmart, Nvidia, and Yandex reporting their figures. Now, we'll be kicking off today's webinar with Walmart. The company reported its figures on Thursday before the market opened. The company beat both its earnings per share as well as revenue estimate, which boosted its share price, as we can see right here with the open on Thursday. Now, Walmart store sales rose by 5.6% during the last quarter, while e-commerce sales in the US rose by 1%. Now, this 1% might not be seen as something significant by most traders, but as I always keep mentioning, it's worth putting it in context of the bigger picture. And just by looking at the bigger picture, it's worth noting that on a 2-year basis, e-commerce sales have risen by as much as 70%, which obviously this makes up for a pretty significant figure instead. Now, in a press conference, executives of the company also mentioned that they expect total sales to increase by about 4% in total. And if we look at the green candle here, overall on the day, Walmart ended being up by 4% or $5.30. And again, we can see the impact that the earnings report had onto the stock price with the open on Thursday. As we mentioned, the figures, they were released in the pre-market hours. So when that is the case, we can expect the impact to be seen with the open at 9:30 Eastern Standard Time, which is basically when the market opens in New York. Now, on to the next stock, we'll be looking at Nvidia. Now, Nvidia, they released their figures on Wednesday. They did that after the market closed. Therefore, the true impact was to be seen from Thursday onwards. Now, the company beat both its revenue as well as the EPS estimates by 3% and 7.7% respectively. Now, even though the company did show strong results, as well as it gave a positive outlook for the rest of the year, its share price, as we can see here on the 2 following days, it fell by as much as 7% with the open here on the very next day. Now, part of the reason for the decline was due to the fact that Nvidia, earlier this month, it actually had a report which mentioned that they had to walk away from a $40 billion deal due to regulatory reasons, which would have seen it acquiring ARM Limited, which is essentially another big semiconductor player, but this time in the UK. Now, overall on the year, its share price is down by as much as 20%. Now, obviously, it's worth noting, again, if we just put things in context of the bigger picture, we can see that its share price, it has enjoyed a pretty nice rise over the past couple of weeks, as we can see by the chart here. So this could be seen simply as something like a healthy correction, for example. Again, even though its share prices are down by 20% on the year, it's still showing some pretty strong fundamentals, and also the executives of the company gave some pretty strong outlooks for the rest of the fiscal year. So it would be interesting to see how the company's stock price is going to play out in the next couple of weeks, and obviously for the remainder of the year, as we still pretty much in the early days, still in February, obviously. So yeah, just something always to keep in mind is just to put things in perspective and in context of the bigger picture, just to get an idea of the overall stock's performance. Now, on to the next and last stock for this week. We'll be looking at Yandex. Now, Yandex, it beat its EPS estimate. However, it missed the revenue estimates by a staggering 70% when it reported its figures before the market opened on Tuesday. Now, despite the fact that the company also gave a positive outlook for the fiscal year of 2022, saying that it expects total revenue growth of around 6.5 billion, the recent disputes and uncertainties between Ukraine and Russia also saw its share price decline by a total of 14%, as we can see here, which were the 3 days following the earnings release. On top of that, overall on the year, its share price is down by as much as 27%, or $16.6. And we can see this being reflected. Here was pretty much November 2021. And with moving and looking towards 2022, things are still not looking quite as positive now with regards to the chart, as we can see this overall decline after reaching the swing high here of $86. So yeah, this is with regards to some of the big corporations reporting their figures during the last week. For next week, for those interested, the ones to look out for are Alibaba, Moderna, and Beyond Meat. Again, since we also had the e-commerce giant Walmart reporting their numbers, it's going to be interesting to see how Alibaba is going to fare comparing to Walmart. Again, while these are not the only major stocks, they're going to be some of the key ones, who could be worth keeping on our radars. So yeah, this is with regards to stocks, and now we'll just move on to Forex. I'll just pull up the chart of the euro dollar in the meantime. Now with Forex, we had a mixture in sentiment with regards to the events that took place the past week, which is what could have also led to the neutral moves in direction with regards to the euro dollar as well as the pound dollar. Now, while the euro dollar, if I just switch it back to the daily time frame, we can essentially see that we did start the week in the red. It later did improve slightly with the Eurozone industrial production figures topping estimates for December. But as we can see, we still ended the week in the red, still given by the uncertainty between Ukraine and Russia. And similarly, if I pull up the chart of the pound dollar, we will see more or less a similar story. However, we did start the week in the green with the pound dollar. But again, as we can see towards the end of the week, we started dipping a little bit. We also had the average earnings index topping estimates by as much as 0.5%. Now, the estimate was an increase of 3.8%, while the actual figure came in at 4.3%. We also had the retail sales figure that came on Friday, which also beat expectations by almost 1%. Now, overall, if we look at the pound dollar, if I switch on to the weekly time frame, you will see that essentially it was more or less unchanged with regards to the currency pair. We can see it did increase by a little bit. However, we have been in this kind of consolidation for the past 2 weeks. If you can see, if we compare the high here with the low, we can see that pretty much we tapped the highs and lows and just traded in between that range for the pound dollar. And if I switch back to the euro dollar as well, we'll see a similar story with regards to this week's range, which is that essentially we've been in a tight consolidation. The euro dollar overall on the week, it was also unchanged, as you can see by the chart. It only fell by 0.23% or 26 pips. Next up, we'll just be looking onto gold. Now it's a different story with regards to gold. As we can see by the chart, the yellow metal had yet another strong week with the risk sentiment between Ukraine and Russia still not improving by a whole lot. Now, last week we mentioned how we've been stuck in this range. If I just zoom out a little bit, you'll see this range here, which is between the $1,700 mark and the top side here, which is the 1900 mark. So yeah, I mean, the main reason for sentiment was more or less the ongoing conflict between Ukraine and Russia, which we said is still not improving. Now the prices are now eyeing the top of the range, as we can see right here, with the price now trading at $1,897. Now this, if we can see at the chart, this was gold's third consecutive week in the green, now being up almost 6% or $107 over the course of the past 3 weeks. And if we also want to look at an indicator, specifically the RSI, which I'll keep at the default setting of 14, we can see we have a healthy reading of 63, which again, depending on how you're setting your parameters, this, usually the default being at 70, it's still not in the overbought region yet. And lastly, we'll be looking onto oil. Now, oil prices have snapped the 8 consecutive week rally that we've enjoyed recently. Oil inventory figures showed a strong negative result, as the expectation was for inventories to decrease by as much as 1.5 million barrels, whereas the actual figure showed an increase by as much as 1 million barrels, which could have also been the likely factor for the overall decline, as we can see on the week here. Even though the commodity ended the week in the red, it only declined by as much as 2.15% or $2. And again, putting things into context and looking at the overall bigger picture, oil prices are up by as much as 30% or $21. And looking at the RSI, it's showing a healthy reading of 68. Again, this always depends on the parameters that you set for the RSI. So for some of you, this could also be seen as overbought. But as we can see, it's enjoyed a pretty healthy rally and is still at the top of the rally, as you can see here. If we look at the close of last week, we're pretty much trading about $1.50 off the highs from last week. And there you have it. This is as far as the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.